Hello, and welcome to this video on the sale or disposal of non-current assets with part exchange. So this is a new element of our sale or disposal of non-current assets. We're dealing with part exchange now. So part exchange, what is part exchange? So part exchange refers to the situation where a business uses an old current asset as part payment towards the purchase of a new non-current asset. So the value of the old asset is deducted from the cost of the new asset, and the remaining balance is paid in cash or on credit. Then the part exchange allowance is treated as the proceeds of disposal in the disposal account. Right, let's have a look at an example of this now, make a lot more sense of it. So an example here, got Charles Barclay's financial year runs to the 31st of December. On the 1st of January 2018, his accounting records show that he owns a car with an original cost of £12,000 and depreciation to date of £7,200. On the 1st of October 2018, Charles bought a new car at a cost of £15,000. He traded in the old car at a part exchange value of £5,500 and paid the balance by bank transfer. So the allowance he was given on his old car was £5,500, and then the balance to make up the £15,000 was paid by bank transfer. And to work out the balance is the £15,000, take away the £5,500, so it's going to be £9,500. Now, Charles depreciates vehicles at 20% per year using the straight line method. His accounting policy is to charge a full year's depreciation in the year of purchase, but none in the year of sale. And we've got to do the following. We've got to show the following for the year ended the 31st of December 2018. So A, the vehicles account. B, provision for depreciation account for vehicles. C, disposal account for vehicles. And finally D, a statement of financial position extract at the 31st of December 2018. Right, so let's have a look at the layouts now. So part A, I've got my vehicles cost account now. So I'm going to take the information from the question and transfer it to the nominal ledger account for vehicles cost. So here we go. On the 1st of January, it shows he owns a car with an original cost of £12,000. So that's going to be the balance brought down on the 1st of January. So that's on the debit side. So the 1st of January 18, now balance brought down. And to check the amount, just go back to the question. It was cost of £12,000. That's £12,000. And depreciation to date of £7,200. So the depreciation goes in the provision for depreciation account. So again, it's the start of the year. Now depreciation provisions on the credit side. So it's the 1st of January 18, and its balance brought down. And the amount was, just check the amount, was £7,200. So we put the information in that we've been given at the beginning of the question. On the 1st of October 2018, Charles bought a new car at a cost of £15,000. He traded in the old car at part exchange value of £5,500 and paid the balance by bank transfer. So he traded in the old car. So I go back to my cost account. That means this car he no longer has anymore. So it's going to be now transferred to the disposal account because it's no longer owned. So the disposal account. And the date this happened was, I've just checked with the question, it's on the 1st of October 2018. So the 1st of October 2018, that car now has gone to our disposal account. It's not owned anymore. So £12,000 can be transferred to our disposal account. So whilst we're doing that, I'll go to the disposal account now. And here we go. So you credit your cost account, you debit your disposal account. The 1st of October, it comes from our vehicles cost account. And the amount was the £12,000. Now, as well as transferring the cost to the disposal account, we've got to transfer the depreciation as well. So again, on the 1st of October, 2018, the depreciation is transferred to a disposal account. So disposal account. And the amount there is the depreciation on the previous vehicle, which was £7,200. So down to my disposal account on the credit side now. And after £7,200 is the 1st of October 2018, and it's my vehicles provision for depreciation. So now we've taken the previous vehicle out of the accounting records now. Let's see what happens next. So he traded in the old car at a part exchange value of £5,500. So that's like the proceeds. So go down to a disposal account. Got £5,500 is the allowance he was given on his old car. And that's going to be used to purchase a new vehicle. So that's going to be transferred now to the vehicle's cost account. And the date of that was the 1st of October 2018. So I now go to my vehicle's cost account. I'm looking for that value, which was £5,500. That's come from my disposal account. And that is on the 1st of October 2018. So that's the amount of money received in part exchange for the old vehicle, and it was used to buy the new vehicle. That's what it tells us here. He traded in the old car at a part exchange value of £5,500 and paid the balance by bank transfer. Now the new car cost was £15,000. We said earlier on, and the difference by bank is the £15,000 take away the £5,500. And that comes to £9,500. So that's going to be the balance to pay for our new car. That's paid by bank transfer. It's on the 1st of October 18. So just a little note on the side. So we had the disposal account. So that was the part exchange of £5,500. And then the bank transfer was the £9,500. That then gives us a total for the new car of £15,000. So that's our new car. So now my cost account now, we now work out our balance carried out because nothing else happens during the year. So we total the debit side and we total the credit side. Whichever's the biggest total, that's what goes in the bottom. So the debit side is £27,000 and the credit side must also be the same amount. That's £27,000. Then we have our balance carried down. So at the end of the year now, it's going to be the 31st of December 2018. So that's the difference of the 27,000. Take away the 12,000, which is a £15,000. Now that £15,000, that's our new vehicle. The disposal account part exchange figure for 5,500 plus the bank transfer of 9,500. Now to finish that account now, so I'm going to put in the details there. That's our balance carried down. If we have a balance carried down, we automatically the next day have a balance brought down. So it's the 1st of January 2019. We have balance brought down of the £15,000. So that's our vehicle's cost account completed now. Now, I'm now going to do my depreciation account. So let's make a bit of space there. Provision for depreciation. So, at the end of the year, 31st December 2018, there's no depreciation on the vehicle that was sold during the year, but there is depreciation on the new vehicle. And that's going to go to our income statement. So we need to work that depreciation out now. So if I go to the question information, it's 20% per year using a straight line method. So the cost of the vehicle, the new vehicle was £15,000, times 20%, that's going to give us £3,000. So the charge in the income statement will be £3,000. Now again, we're going to balance our account. So the credit side is the largest total, it's 10,200. The debit side must be the same, and then the difference will be our balance carried down. So 10,200 take away 7,200 is £3,000. So that's going to be our balance carried down at the end of the year, the 31st of December 2018. Balance carried down. So basically that's the income statement charge for the current year for the new vehicle. Again, if you have a balance carried down, we must have a balance brought down on the opposite side. So the 1st of January 2019, we have balance brought down of the £3,000. Now, our disposal account now. We've got the vehicle cost on the debit side of 12,000. The provision for depreciation on that vehicle at time of disposal was 7,200, and the part exchange allowance was £5,500. So now again, we'll find the balancing figure. So the debit side at the moment totals 12,000, and the credit side totals 12,700. So that's the largest total. So 12,700 on the credit side. Debit side must be the same because both sides must balance to the total amount. So we've got a difference now. The difference then is the 12,700 take away the 12,000. That gives us £700 difference. And that's going to go to our income statement. And against the end of the year, oh no, this one is the date of disposal. This is the date, the 1st of October 2018. And that is going to be a profit on disposal. Put it in brackets. It's going to be profit on disposal. So they made a gain, a profit of £700. Now, again, you can do a little summary of that, which is what I like to do. So we've got the cost, depreciation, carrying amount. Now remember, they will still use net book value, sometimes instead of carrying amount in your exam. We have the proceeds, and then we have a profit or a loss. So the cost was £12,000. The depreciation at time of disposal was 7,200, which gave us a carrying amount of 12,000, take away 7,200, or £4,800. Now the proceeds was £5,500. Now if the proceeds is greater than the carrying amount of net book value, that means I made a profit, and it is. And the difference there is the £700. So therefore we've got our profit on disposal, which goes in the income statement underneath our gross profit. So I'll put a couple of lines in. So thank you very much for listening and watching this video on the disposal of non-current assets involving part exchange.